Just a few weeks ago, Japan intervened in the currency markets to rescue the yen for the first time since 1998. The yen has been collapsing in value versus other currencies like the US dollar, and in order to save the yen, they decided to sell other assets to buy back yen to drive the value higher. The problem is, most people warned, major economists and most people who understand the way this works, warned, hey, this is just a temporary measure and intervention on currencies doesn't help long term. And that is exactly what happened. And they were forced to intervene yet again on Friday, October 21st. Now the only question is, what happens next? Ready? Let's dive in. So Japan is going through it right now. Recently, their inflation rate hit 3% for the first time since 1991. Now, Japan has been kind of the shining light on a hill for people who love to print money, saying, hey, we can do it because Japan can do it, and they didn't have any inflation. Well, the problem is they were printing a little bit differently than the rest. There are two types of money, if you will. There's base money and there's broad money. Think of this like banks money versus people's money. If you print bank money, that gives the ability for people's money to grow, but it doesn't necessarily cause the people's money to grow. So in the wake of the financial crisis, when we bailed out the banks in the United States, a lot of people said this would lead to inflation. But all we did was give the banks back a bunch of money. That didn't necessarily cause the individuals, the people's money to grow. And it actually didn't. If we take a look at this chart, which is the total money supply, there was a little bump right here leading up into 2009 in the broad money supply, but it flatlined after that for a little while before it resumed its normal growth. And so the actual money that was in people's hands didn't expand. It was certainly a lot higher than it would have been if the banks would have been allowed to fail. You would have seen this number just plummet. So it was higher than it would have been otherwise, but relative to its historical trend, it just kind of kept on chugging along like normal. Now, in Japan, as they've been printing money for years and decades, what they've really been doing is trying to cause inflation, trying to cause people's money to expand. But the individuals and the corporations have been paying off debt, deleveraging, and saving that whole time. So their broad money hasn't expanded, even though the central bank has been trying to cause that to happen. They've just been able to print bank money. Contrast this with what central banks like the Fed did in 2020, where they directly caused the money supply of people's money to expand instead of just expanding bank money. We saw massive inflation as a result of that. But now Japan's inflation problem might start hitting them like it's hit most of the world, even though hitting 3% is not necessarily exorbitant compared to the rest of the world. It's still higher than what they've had for a very long time. Now, one of the reasons for this is because the central bank in Japan has been doing something called yield curve control, which means they're trying to make sure that the interest rate on the 10-year government bond doesn't exceed 0.25%. So the government in Japan can borrow for 10 years at 0.25% as much as they want. If there's no individuals willing to lend to the government at that rate, which there are not, then the central bank, the Bank of Japan, steps in and they print money and lend it to the government. Because of this has been putting downward pressure on the value of the yen because they've been printing a lot of money to loan to the government. And so nobody wants it. That's very simplified, but basically you increase the supply of something, the value of it will go down. And so we can see that since 2021, the value of the yen versus the US dollar has just been collapsing with these major drops in value that happen very quickly. It got to the point where a few weeks ago, they had to intervene for the first time and start buying back yen to try and drive the price of the yen higher. But intervention cannot last forever, and it does not work forever. It's a band-aid on a long-term problem, and that's why you can see the yen continued to fall shortly after that, and they're forced to intervene again today. The rationale given here is funny because the finance minister said the country will take appropriate action against speculative moves. And this is what always happens in every single currency defense. They point the finger at somebody and say, hey, there's these speculators, there's these hedge funds, there's these people who are betting against us. They're moving the market against us. They're hurting us. We need to take action against the speculators. That's exactly what Nixon used as an excuse to close the gold window. He didn't tell the world that we were 2 weeks away from running out of gold. And if he wouldn't have closed the gold window, we would have been out of gold anyway. And everybody would have, there was a bank run going on across the world because we had promised the dollar was redeemable for gold. We printed way too many dollars and suddenly everybody went to go get their gold. There wasn't enough gold left. And so it wasn't the speculators' problem. It was the fundamental problem with the value of the currency. And that's what happens every single time. It's similar to shorting a stock. Hedge funds and individuals have an incentive to go out there into the marketplace and find fraud, because if you can find fraud and profit off of it, you are going to have a much more effective mechanism at preventing fraud than something like, I don't know, a 3-letter agency like the SEC that gets notified of something like the Bernie Madoff Ponzi scheme for years and does nothing. If you have the ability to short a stock, you're going to have people motivated by profit to go out there and find fraud and then expose the fraud so that they can profit. You're going to have a much more effective mechanism against preventing that fraud because there's people with skin in the game. And if they're wrong, then they lose. That's the great thing about shorting, that if you're wrong about something, all the people who are wrong about Tesla, being fraudulent for years and massively shorted it, they got burned when Tesla finally exploded in price. And so the same exact thing is happening here with currencies. When you have intervention where you have a central bank coming in and trying to push the market in the opposite direction that the market would be naturally going, they're moving against the fundamental value that the market has placed on something, so it is only temporary. The only long-term solution will be to reverse the central bank's decisions and the government's decisions that are negatively affecting the value of what is being pushed down in price by the market. At the end of the day, there's always two choices to be made. You can choose to save the currency or you can choose to save the economy. And right now, it looks like the Bank of Japan is trying to act as if that decision doesn't have to be made. They're trying to save the economy, print money for their government, and also save the currency at the same time. You cannot, in perpetuity, choose both of those at the same time. You're going to have to go one way or the other. And if you don't, then they might both break. And finally, if you haven't gotten it already, my bear market investing guide, brand new guide, is available right now. It takes you through identifying bear markets, then in that identifying the best assets, and then within that identifying the proper price to be able to buy those assets at to make sure you're getting a good deal. This guide is normally $300. It's on sale for $99 right now. Link is in the description below. As always, I really appreciate you guys. Thank you so much for watching. Have a great day.